Good day, all. Ira Epstein of Linn and Associates with your metals market wrap-up for this Tuesday, the 21st of January, 2020. And we're about 5:25 p.m. Central Time. I'm obviously quite late. So we're looking at the opening of Wednesday trade. The markets opened at 5 p.m. in many of them, all the stock indices, certainly the metal markets. Dollar index is still not open. That's why the S is next to it. It's settlement. But you do have open a number of the foreign currencies. Now keep in the back of your mind the impeachment trial is still going on. How many hours a day they're going to go? It's my guess they're going to go 8 to 10 hours a day. It'll get boring for a lot of people real fast. You want to get past the procedural to get into the meat of what they're going to do. Right now it's all about procedure. The event of the weekend was the spreading of this virus out of China. Now it has been detected, and I'm sure if you look at your evening national news, at least our wires say, it was detected in Seattle, Washington. So that puts South Korea, Japan, Australia, I believe that the Philippines might have a case of it, possibly Thailand, certainly a lot of parts of China. Here's where it even gets worse. This is the Lunar New Year there. So now you get the disease that can spread for a week, because this is a week-long holiday for the Chinese. The question is, will they even travel? If you looked at their travel stocks this morning, they got smashed, down about 7%. People are canceling. They don't want to be near other people. Transit. All these masks, you know how you see that out of Asia, so many people wear those masks because the cities are so crowded and they don't want disease. They're running out of those. You know, and I'm telling you what I'm reading. Do I know? I'm certainly not there. Well, I would have thought that would give a safe haven bet possibly to the gold market. It did not. Gold actually and silver both got hit, and I was surprised by that. Logic, it didn't make sense to me. The Japanese yen did get a bid intraday. It's quickly giving it up. Bonds and notes had a bid all day as well. So in the gold chart, what is going on? Well, from the highest close we've had on a weekly basis, we're only off of that by $3.20, $3.30. I wouldn't get too worried. The market hasn't given up much there. We've had starts and stops, I admit that. Today's action on the chart, well, you have an outside day down. That's certainly not good. You can see tonight, market's about where it was yesterday at the close. The swing line pattern looks like you've got a higher high, but you now have a lower low, don't you? I'd say you do. So the higher high here, the lower low, I have a confusing chart pattern. Market went neutral on us. The market held the first challenge of the 18-day average. Now, what's so important about that? Do you remember that I said when you lose an embedded reading, the market often challenges the 18-day average of closes? And guess what today did? It's right through here. Watch. You hit that number. Where did you stop? Right on it. But you left the uptrend. You didn't go into a downtrend. You left an uptrend. There's a big difference between the two. The resistance is dropping now to 1589.70. The Bollinger Band. See these black bands? The market will trade within them 95% of the time. And I do realize that you get all excited when the market's over at Ira, it's going to run away. 95% of the time, yes, it can move higher along the band, but buying it over the band can be a very expensive proposition against you. I am not telling you what to do. I know what I teach, and I know what I put in my courses, and I know what I put in my nightly subscription recommendations in the morning one. That's just something I don't do. But I'm also aware this market acted good today. Even though it stepped out of an uptrend, it's acting good. In terms of the lost embedded reading, this is where it happened, right here. And if you don't get that reading back the very next day, I say the market owes hitting that number. Now, two things can happen. If it doesn't hit it right away, this number has a tendency, the 18-day average, to creep on you all the way up. And what you think you could make in the market, here you closed at 1560 to get to that, well, it starts drifting away from contra-trend traders. You see what's going on? Now it's 1534, 1538, 1542 even. 1546. Today it hit it at the, 1550 area. So it made some money for those people, but you went through an awful lot to get to it. And it finally hit that number. I applaud it because I was wondering if it was going to hit it. I was starting to give up on it. I'm noticing that if you're using ETFs and spiders, it doesn't do the same thing. And again, I'm going to tell you that 6.5 hours a day of trading versus, for the metal markets, approximately 23 hours a day, Monday through Thursday. A very big difference. You feel in more of the action on a futures. So you use the two together. In the gold versus silver ratio, this is not favoring silver. The higher you're going, you need in a perfect world to fill up that shopping cart of silver. You now need 87.59 ounces to get 1 ounce of gold. That doesn't include commission or any of that. It's a perfect world. And if you look at silver, where did it fall today? Well, the silver market, let's look at Friday's action because I only show the weekly charts then. The market was getting bordered by the upper Bollinger Band and the lower that are wrapping their arms around the market. The first support, if you break down, would be the 100-day average. Coming in, I was bullish. I'm looking at higher lows, higher highs. Frankly, I was hoping to see this market get up to the upper Bollinger Band. I did not see the market getting under that break low, but if it does, out you gotta be. And that's what it did. Notice where it went. Right to the lower Bollinger Band and the 100-day average. Those numbers came in, 1771.60, 1773. The low was 1762, and tonight you're back up to 1777 within them, but you stepped out of the uptrend. And I know some of you want to be heroes, go, I'm friendly, that's where I think the market's staying over. I'm not arguing. I'm just saying you stepped out of an uptrend. I didn't think that was going to happen today. I get the copper questioning what this virus disease in China can do. It can slow down an economy. People don't want to go to a factory. They're worried about the disease. Just think of all the problems. They have the experience of 2002 with SARS. This one, now you've got people really scared. I'm not saying they're in factories right now, too. Remember, this is the Lunar New Year in China, but China's not the only place the disease is showing up. So the question is, now what happens? Well, I think you're in a consolidation phase. You haven't begun the U.S.-Chinese trade deal. Remember, from the signing, it takes 30 days. January 29th, Justin Trudeau of Canada said that the legislature there will bring up the USMCA deal for passage. The presidents will sign it quickly if they pass it. I expect that everybody, Mexico's already signed, will have it done. And then 30 days after that, we'll probably be humming. So I'm looking at this pullback saying, gee, if this market consolidates enough just mentally, I wonder if we don't have a serious issue with that virus, is that all that we're dealing with? If we do have one, I don't know where you're at. In the platinum market, momentum coming down. You've got outside day down today. You've got lower highs, lower lows. So the swing line trend is down, but the bias is up because you're over the 18-day average of closes. In other words, a neutral market. And the strongest of the markets continues to be the palladium. Now, if it loses its embedded reading, which it hasn't done, but it's knocking on the door of it, a down day today, Wednesday, would probably do that, then I'd be careful. Price and the 18-day average, like in the gold, might go run at each other. So I'd be very, very cautious with that. Last, in the dollar index, traders today, they didn't buy the dollar. The dollar was actually down a little bit. Wasn't a safe haven, but I'm watching the slow stochastics. Both numbers over 80 today. Both over 80 on Friday, not Thursday. If this market's going to fail, it's going to fail right here, and it's got to do it basically now to just keep an overbought condition. Is it trending? It isn't. You've got a lower and low, higher high with a resistance point right here. I'll be looking to see the reactions to all this tomorrow. So you put it together, you come up with game plans. And if you like what I'm explaining here, you should, of course, take a look at my morning subscriber video where it's Ira and let loose. Buy here, sell there. I'm going to be wrong. I promise you I'm going to be wrong. I'll have winning trades too. The one thing you're going to see is a trading discipline using these technical indicators. Do I use them all? Of course not. I use the ones that, if you will, filter the one before it. be it the swing line, window envelopes, Bollinger Bands. You don't see them all here, but that's the concept. But you have to understand them to know how to filter with them. So what we've put together with our good friends from Modern Trader magazine, actually it's Modern Trader, their magazine was Futures magazine, is these technical indicators. How do you get it? Go to our website. It's free. You can sign up for it on the bottom right if you'd like to see more of what we do. You know, my new ETF Spider videos are out. You'd have access for a free trial if you wanted to them. They come out about 4 in the afternoon. Specific buy, sell, do this, do that. You can also click up here. It'll take you right to that page. I'm Ira Epstein. You have a good day.